Alright, let's talk a bit about Kraken Robotics. This company was recommended to me in the Discord, so thank you for that. Finally, I've gotten around to do some due diligence on this company, and due diligence we shall do in this video. So why is the stock up by so much? Well, it comes down to a number of factors. For example, I see a Moat, and then in terms of growth as well. And I will talk a little bit about a potential bearish case in the future for this company. But as of now, this Canadian company performed extremely well doing the batteries for underwater drones, and we've seen drones being very useful, very productive on the battlefield of Ukraine. So of course the eyes of investors turn to companies who do this, and in this case I think that the moat for Kraken Robotics is that they do these batteries for underwater drones. We see big competition in terms of batteries, mainly from China, who sell very cheap lithium-ion batteries, for example for the e-bike that I bought. We see battery factories being put up in Europe. In my home country of Sweden, we had Northvolt, huge battery producer. They went bankrupt here recently, just taking on loans and not being competitive enough. Terrible margins on everything they sell, but this is not the case for Kraken Robotics, and we will explore this together when we look at gross margin, because man, I just love the margins for this company. It's looking good for this company. But first of all, market cap, 2.4 billion Canadian dollars. This means that this is still a small company. If they double in stock price from here to $14 a share, well, then they will be a potential acquisition target for larger companies. But for now, this company does not really seem to be on the radar for anybody else other than retail investors who hang out in the Bull Nova Discord apparently. So you guys are sharp. Alright, so let's take a look at some of the numbers here. I took a look at on a quarterly basis, and we can see that revenue has been growing, which of course it is fantastic. But as I mentioned before, this company has good profit margins, and they have been able to protect these margins. Perhaps it is that they have roughly 25% longer charges for the batteries that they can sell to underwater drone producers. Military, great contractor, great business, you know, the buyer to have. They are not going to cheap out, but we see that alright, there's not a whole lot of competition here, because cost of revenue on these 31 million, this is in thousands of dollars, so this is 31 million, is $12.7 million. Canadian dollars, so not American. And they get to keep 18.5 of this. This is fantastic gross margin. So in terms of the cost to produce these batteries versus what you actually sell them for, you just have a nice margin on top of this. And then of course other operational expenses, other financial expenses on top of this. But underwater batteries for drones apparently is a great business to be in. Will they be able to protect these margins long term? Perhaps, perhaps not. Perhaps some companies take a look at these margins and say, hey, that's a business we want to be in because it's clearly very profitable. And then margins might suffer, for example, like we see in the GLP-1 drugs market when more pharmaceutical companies try to get in on this amazing GLP-1. Could be the case. However, as for now, what this tells me, these margins, tells me that Kraken Robotics, as of right now, as of recording this video, has a moat. They are able to keep up this high level of profit due to product excellence or lack of competition, something like this. And do I think that underwater drone makers will make some sort of vertical integration and start to produce batteries themselves? No, it doesn't really make sense in the capitalistic market that we have today. It makes more sense to specialize into something, do it really, really well. Eventually, if you become very, very large like Microsoft, well, yes, you can diversify into more of a holding company structure, but for more SMB sized companies, this does not really make sense, and it will just spread resources more thin, and you will lose out to companies who are more focused, more specialized, and put all of their resources where it really matters. And in the case for Kraken Robotics, yes, they're putting the money towards these underwater batteries, performing very well. They seem to be having a lead right now. They have the margins, they have the growth. Let's zoom out a little bit and we can take a look at the annual numbers. We can see if we zoom back here to 2021, the full year had less in terms of total sales than just the latest quarter, and it has only been accelerating ever since then. So Rule of 40 looking good. That's what you need to apply to growth companies, and not take a look at the price to earnings too much in this case. They are profitable, so they get the price to earnings in this case of 127. This is a backwards looking metrics. For some reason, especially value investors love to get hung up on this number, but it does not give a fair valuation of a small cap growth company. Definitely not. But a very interesting company. I'm happy to have done a quick analysis on this very interesting stock. As always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.